Welcome back. In today's video, I'm going over one stock that I'm buying more of today and why I think it's going to be a huge gain over the next decade. And I'm also going to go over a few things like an update on my portfolio and my overall view of the market. So first I want to look over my portfolio. Right now, my portfolio is up about 13.5%. This is a portfolio I opened up of June 2025. I opened this portfolio up more so for a social media portfolio so I could start off fresh while making videos. It's a way for you to track what I'm doing, a way for me to post all my updates, all my buys, and it's really a way for me to just start off fresh. I opened up my portfolio June 9th. Since June 9th, the S&P 500 is up about 10.5%, close to 11%. So I'm slightly up on the market right now, but overall my portfolio has been pretty volatile. At one point it was up over 22%, now it's up only 13%. If we take a look at some of my holdings, we have ASML and Google as my top two holdings. They take up almost 50% of my portfolio. ASML is up over 35%. Google is up over 57%, so they've been doing really well for me. We have Adobe and Duolingo as the next two. These take up a little over 30%. Both are down. Adobe is down over 7%. Whereas Duolingo is down over 20%. These are two stocks I'm adding a lot, and I think they are going to pay off big time for me. Next, we have Amazon, about 15%. Amazon just had a nice gain after earnings. I'm up about 11% on them. They've dropped a little. I was up close to 20% at one point. And then my two smallest holdings, we have Nike and AMD. These are smaller because in my other portfolio, I own a lot of them. Nike, I'm still down on, whereas AMD, I'm up close to 100% on. So now I want to talk a little bit about the market right now, where we're at, what I think about it. So the fear and greed index right now is at 21, which is extreme fear. These are the lowest levels we've seen since the tariff crash, and you could feel it right now. The market was down over 2% this past week. At one point, QQQ was down 5%. It came back a little before close on Friday, but you feel the fear. To me, it feels like people are almost looking for a reason to be fearful, and there are reasons. But a lot of people are talking about how this is the AI bubble crashing. We're starting to see it crack, which that's where I disagree. Now, like I said, fear in the market is something right now. I don't think it's related to the AI bubble. I don't think it's related to the AI crash. We haven't seen anything in earnings to justify that being a reason. Now, do I think someday it might crash? Yes. Do I think it will? I think at some point it will. Right now, is that the time? No. I do think we will see some sort of correction or 5% dip by the time before 2026. Whether that's right now or whether that's in a few weeks, I don't know. But I could totally see a correction. And if we do see one, that'll be healthy and I'll be okay with that. Especially as a long-term investor. Whatever happens in the short term happens. I'm going to continue to buy world-class companies. And if they go on a discount, that's great. So those are my thoughts. A lot of negativity and we'll see what happens. Now before we get into the one stock I'm buying right now, I want to say thank you for helping me get past 750 subscribers. At the start of summer, I was at about 25 subscribers, and I was thinking, you know, if I hit 100, 200, 300, that'd be incredible. And now we're almost close to 1,000, and that's my new goal. I'm trying to hit 1,000 subscribers by 2026. So we have a little less than 2 months. So if you're not subscribed and you're watching this video, go subscribe if you want. You know, it's free. It helps me out. It helps boost my content out to other people. Any likes and comments help me greatly. But that's just a quick shout out. I want to say that's my goal, hit 1,000 by the end of the year, and I'd love to see if I could do that. Okay, after some wait, let's get about the one stock I'm buying right now, and that is no other than Duolingo. Now, Duolingo is a stock I've talked a lot about lately. I had a deep dive I posted 3 weeks ago, why Duolingo could 10x from here. I go over my deep dive there. It's a little over 8 minutes, so if you haven't seen that already, I'd go watch that. And then just a few days ago, I posted my reaction to Q3 earnings on Duolingo. Now on social media, especially on TikTok, I got a lot of backlash because I was talking about Duolingo so heavily before the earnings and how I was very excited for it. And obviously when you see the stock drop the way it did, now it's down over 60% over the past 6 months. And then after the earnings, it was down about 25%. People only watch the stock price. I should say most people just watch the stock price after earnings and figure out whether it was a good quarter or not. The problem with that is that's gambling. If you are only looking at the stock price to dictate whether a company had good earnings or not, you're just flat out gambling. So I got a crap ton of backlash. I wanted to address the earnings in my video, but I feel like I could do it even more because as I continue to learn, as I posted that video right after the earnings, I've continued to become more bullish long-term on the company, and I wanted to update you guys on that. So Duolingo is down over 60% the past 6 months, and I think a lot of that early on was the valuation. They had a PE ratio of over 270. So, you know, that's at a level of being unjustifiable. What also happened was during that same time, the CEO announced that they are going to have to hire less humans because AI will be able to help them out tremendously. So a lot of people were upset with Duolingo. They were losing followers on TikTok, Instagram, all their socials. So those two factors of being overvalued and then the controversy made them drop, and it's kind of been shaky since then. And then obviously after earnings just dropped over 38% this past month, 35% or 25% after the earnings report. But let's get into some numbers. Was this earnings report bad? Can we justify a 25% drop in the company, or is this an overreaction? So as we can see, these numbers are comparing year over year. So quarter 3 of last year compared to quarter 3 of this year. Year over year, they're up 36% in daily active users from 37 million to 50 million. So they surpassed 50 million daily active users for the first time ever. Monthly active users is up 20% year over year. They're up to 135 million now. Paid subscribers is up almost 3 million from last year, up 34% year over year. Paid subscriber penetration is up 0.5% from last year. So that means how many of their free users are converting into paid users. So about 9% of their overall monthly active users are now paid users. As we get into it more, revenue is up 41% year over year. Total bookings is up 33% year over year. Net income is up so much. Adjusted EBITDA is up to 80 million and margins is up about 5% to 29.5. So overall, we saw growth everywhere. Revenue, profitability, users, all those hit record levels, but the stock dropped 25%. So what am I missing? What haven't I talked about yet? It comes down to this. Duolingo's quarter 4 bookings outlook came in a little light. So Wall Street expected 343 million, whereas Duolingo only guided for 330 million. So what this is telling investors is Duolingo is expecting to slow down in growth. The problem comes with a company like Duolingo is they're a growth company. Valuation is high because investors are paying a premium for the 40%, 50% growth year over year in users, revenue, all this stuff. So Duolingo is now telling investors we're expected to decline, we're expected to deaccelerate in growth. So all of a sudden, people are fearful, people are selling out, they're saying, this is not what I paid for high growth, and that's no longer happening. People are missing the story. This is the problem when you only look at the numbers or you only look at the stock price, you're not seeing why. Why are these numbers what they are? It comes down to this big thing. So Duolingo right now is taking the long view. Now this statement by the CEO gets me excited. You know, they see an opportunity ahead to teach billions of people, and they're making an incredible process on it, but they still are early in that process. My thesis in Duolingo doesn't lie in them just being a small language learning app, small gamified language learning app. It comes to the point where they're going to use AI and data combined to make premium courses for everyone in the world to be able to learn. So when you hear a CEO say they think they could teach billions of people, that gets me excited because that's why I'm investing in the company. But here's really why they guided less bookings than expected. So here's a quote. In quarter 3, we decided to shift the balance towards longer term initiatives. In particular, we're investing proportionally more in teaching better, and we're prioritizing user growth over monetization in A and B tests that get launched. This shift is reflected in our full year guidance. We're doing this now because we want to keep growing users for a long time, and because of our increasing conviction that AI can fundamentally change what's possible in how we teach. If we develop an app that is more engaging than and teaches as well as a personal tutor across multiple subjects, we think we'll become a much bigger business in the longer term. So what we're seeing is a company making a definitive shift. They're shifting from short term to long term. If they wanted to, they could make a bunch of money right now. They could grow revenue at 50% year over year and make everyone happy. But they don't want to do that. They want to focus on the long term. They're shifting away from short-term monetization into more user growth and better teaching. If Duolingo is going to succeed at teaching billions of people each and every year, it is going to be done by better quality. One of the pushbacks I've seen from people is that Duolingo doesn't teach quality enough lessons. They're very slim. They don't go in enough depth. Now, if you have that concern, they are directly fixing that. We saw a stock price drop over 25% because people didn't look into the earnings. This was a clear shift. This guidance change being under expectations is purposeful. If this was accidental, if this was them truly slowing down, then it hurts. Then myself is like, okay, what's going wrong? Is this still a stock I want to constantly be buying, building out a long-term position? But because they are purposely making this change, they are focused on the long term, I'm even more confident in my conviction. And I want to make sure I don't leave anything out. So there's one more thing I want to talk about, and it was mentioned in this earnings report. So the CEO, Luis, got a question asking about AI competition, especially ChatGPT. Now, he mentioned he's not worried about it because of this one fact. When you want to learn a language, you need to be learning that language for years. You know, it's not just a month or a few months of learning. You could ask ChatGPT to help you learn a little. But the thing is, you need to stay engaged. And that's the moat for Duolingo. They keep you engaged over the long term. LLMs like ChatGPT also don't have the depth. They don't have the courses. Duolingo has hundreds of courses for languages to keep you going. It keeps you in order. ChatGPT and other things just don't have that. You need to stay engaged, and Duolingo helps you do that. So overall, we saw an earnings report where everything grew. We saw record level revenue, record level profitability, record level user growth, and then we saw how the market reacted. Now, I think this was by far the best case scenario for this earnings report. I saw the long term of this company strengthen, not only through the numbers, but through the actual thought process of leadership. And we saw the stock price drop. And when the stock price drops, you're buying a company on a discount. So not only did the company strengthen, it also got cheaper. We saw the valuation drop, and especially for a growth company, I think this is a cheap price now. Now, is there still risk involved with this company? Yes. With all companies, there's always risk, and you always need to make sure you're weighing out your options. But for someone like me, I'm younger, I'm okay taking more risk, but I think my opportunity with Duolingo is I have the opportunity to invest in a company I have high conviction in that could pay off huge over the long term. Now, I'm not gonna go all in on Duolingo. I have other investments I like. You know, I'm big into Google and ASML, Amazon, Adobe, Nike, these other companies. But right now, I don't see a better opportunity over the next decade than Duolingo. And that's the truth. So I know I went on for a while. I tried out a different style of video. This is straight. You know, normally I cut up into clips. I don't screen record. I did that. So I kind of rambled on. So if you like this style, let me know. But I want to end off on one last thing. I saw a great quote on Instagram, and this is what it said. The stock market is filled with individuals who know the price of everything, but the value of nothing. Now, I feel like that's a great way to explain what's going on. Everyone knows the price of Duolingo. You go look at it, oh, it's going down. The company's going in the grave. You know, this is a bad investment. I was telling people to move on, you know, just sell out, stop trying to cope. But none of those people saw the value of it. They knew the value of nothing. And that's what I'm seeing right now. In your time in the stock, I haven't been in the stock market for a while. You know, I'm a college student, I'm young. But what I'm learning is a lot of people are emotional, a lot of people don't do their research, and a lot of people don't understand things. So if you yourself can do the research, take your emotions out of investing, ignore the short-term noise, and really just have a long-term a long time horizon, you are going to be successful one way or another. And that's really what I want to end off on is, you know, yourself, your thoughts, your mindset is going to make you successful in the market if you ignore everything around you. You need to do the research. Don't gamble in the market, and just keep going. You know, that's how I want to end this video off. I hope you liked this style of video. If you did, let me know. Just remember, this is not financial advice. You know, I'm not a licensed financial advisor. This is for educational and entertainment purposes only. You should always research stock. You should always do your own research before buying a stock. And yeah, that's all I got to say. I'm buying more Duolingo this week. I plan to keep buying. I want to build out this position for a long time. You know, if it gets back in the 300s, I'll be buying. If it gets up to the 400s, I'll probably be buying because I have long-term conviction, you know, a decade-long view on this company, and this earnings report was great for that. So I want to say thank you, and I'll see you in the next one.